Okay, hi everyone. I'm here to talk about Cassava, and if anybody has any questions, I'm just going to wait here and talk to whoever wants to talk. I especially want to hear from bulls and help them understand that they've purchased shares of if not a fraudulent company, at least a company whose share price is likely to go down quite a lot in the near term. So any bulls who own Sava want to maybe prove me wrong or something like that, I'm ready, willing, and able to hear you out and debate a little bit and be as respectful as I can. In the meantime, I'm just going to wait and see if anybody shows up.
Order cancelled.
Don't be shy. I will remind you that the last time I publicly announced an Alzheimer's drug would fail, it did. So, you know, let's see, who's this guy? Hello? Goldfish, or whoever you are? Hello? Goldfish, you're live. Okay, I guess you don't want to speak.
Order
I will remove
cancelled.
you. I mean, if you don't want to say anything, why would you request speaker? Hello, Rolkt. You're on the air, live. It'd be great to hear from somebody that owns some cassava. What the heck are they thinking? Doesn't seem like a legitimate company with legitimate science. And okay, Rolkt, you lost your chance there. Okay, yours truly.
Hey, hopefully you can hear me.
Yes, hello.
Do you see Cassava having any kind of intrinsic value outside of the Alzheimer's drug?
No, I mean they're I think pretty loud and proud that they don't have anything else other than this one drug.
Yep, that's what it seemed like to me.
Yeah, and usually there's some payables and things like that they're going to have to work through if this trial fails. I don't know why they would proceed with the second trial to prove the same thing, but that trial's not cheap, and they'll have closeout costs and stuff like that.
Sure. Yeah, that was my only question. Thank you, Martin.
Sure. Hello. Oliver. Hello.
Hello.
How are you?
Oh, good, thanks. Yeah, sorry. So I haven't really kept, fully up to date with your position, but, regarding, Sava, didn't, essentially their whole leadership get convicted of fraud, like, a couple months ago?
Not exactly. An outside scientist who was, very important to the company, but not technically an employee. An outside scientist got indicted, not convicted. So he's arrested by the Department of Justice and the FBI and is charged with fraud. And he remains innocent until proven guilty. The CEO and his wife, the CEO who I know rather well, who founded the company, I met 20 some odd years ago. The CEO, Remy Barbier, and his wife were in essence, sort of sued by the SEC and resigned at the same time and settled all at the same time. So they had sort of seen this coming for a while. So that's most of the leadership team. Sadly, their chief medical officer passed away, and he was another co-founder of the company, Dr. Friedman. So in essence, the company's kind of, there isn't a whole lot there left anymore in terms of a management team. It's mostly just, will this trial work or not? There's no real company to run.
Yeah.
It's,
Got it. Thank you.
Yeah. So everyone's waiting for these trial results. It'll be interesting to see what happens. Let's see what this fellow has to say.
Hello, Martin.
Yes, hello.
Hi there. I'm just, I've been keeping up on it, so thanks a lot for the idea, and it's been working out pretty well. I guess my question is, they've promised to release the phase 3 results by the end of the year. Would they, from your opinion or in your experience, would they be able to delay that in any way?
Yeah. Oh, yeah. You can always delay it. It's not easy, but the data cleaning steps sometimes require the CRO to contact study sites and make sure the data that the study sites put into the database is correct. And those calls can sort of be protracted if you wanted to between vacations and follow-ups and stuff like that. So it's not always the fastest process. And I think that if you wanted that process to take its time, you could. I'm not sure what benefit it would get you. But it could take more time if you didn't have a huge team or you didn't want to hustle very much. You could sort of make it take time. The other thing you could do is once the database is locked and you have the primary statistical analysis done, I don't really think you can delay reporting that to Wall Street. Some companies have tried that. They're sort of playing with fire because if you know on a Monday that your drug doesn't work and you want to tell the world on a Friday or next Monday or 2 Mondays from now, that seems like not advisable.
Right, it's material. Right?
It is certainly material, and the shareholders should know.
Right.
But you could make the argument that if you were, kind of an ill-advised, bad advice company, somebody could tell you, well, you should really understand the data before releasing it, and we don't want to make a mistake like Biogen did, where the trial failed and then it didn't. So we need an extra few days maybe, but I don't think you can buy yourself an extra few weeks or months legitimately. But, you don't have to do things legitimately either. It's not like the SEC is sitting there watching over your shoulder. They just, that's not the way the world works. There's a trust, kind of a mutual trust,
Right. Okay. I mean, personally, I don't think the Wall Street
Order cancelled.
Like that very much.
No.
But who knows?
No, I think if they tried to delay a month or two, that would be a very bad thing for the stock. And if they tried to, they have a second phase 3. So, in theory, they could sort of say, we're going to wait for that too. But that's also not tenable, in that, that's sort of a very bad sign that, you're waiting for the next study because you saw the results of this study and they're now good. So I don't think they'll do that. But, I also think that if you believe Barry on the last conference call, he sort of tried to say, look, whether the trial is good, bad, or ugly, we're just going to come out with it. We don't really care. I don't know if I trust that. But, I do think that enough attention is now paid to this where, any attempt at chicanery, one, will probably fail just because, it's easy in a phase 2 to see a subgroup analysis. It's very hard in a phase 3 to actually see good subgroups that actually work. So that's kind of a good thing if you're short, because the fear is that they can find some group that actually did well in the trial, and that's actually not hard to do. If you look hard enough, some random group of patients will have done better necessarily than another. But that doesn't mean that the drug works in that group, because that's just not how science works. That is how randomness and statistics work. You have
Right, I
to.
was going to say that's just statistics, essentially.
Yeah, you have to find. You have to tell everyone ahead of time what it is that you're looking to find, and then confirm it. Looking after the fact is something that I think a lot of people new to biotech don't understand, that that is not a legitimate thing to do. You can't look after the fact and say, well, we did really well if you look at it this way. And
Right.
that's just not something that is done or is legitimate, because it's just not reliable. Usually when you do that and then you try to go again and confirm it,
Order
it doesn't
cancelled.
happen. So it's just very, it's very obvious to me that there is no real opportunity here for them to succeed. Delaying is not something I think they care as much anymore, because ultimately, the CEO who this company is his baby, he's gone. So at the end of the day, like, there isn't much for the company to. There's nobody at the company who has a vested interest that's so high that they're willing to lie and go to jail over it. Obviously, Remy and his wife kind of played that pretty little too close for comfort, but I don't think anybody else would be, who would have that kind of passion to want to
Right.
really kind of mess this up like that.
Right. Okay. Yeah, well, that's all I got, but thank you very much.
Order filled.
I also actually want you to look at another name, but that's on another...
Yeah, we'll have plenty of time after this thing is all said and done.
Yep, okay.
Order cancelled.
Sounds good. And by the way, Goodell just gets better and better every day.
Thank you.
And I'm not being paid to plug that.
I really appreciate it.
Yeah.
That's really nice of you. We work very hard on it.
Yeah, I like so.
Ballin, you had something to say, maybe? Ballin? All right. The biotech investor, welcome.
Hey, Martin.
Hello.
Thank you. Another Gobellion here.
Oh, great.
So, quick question. So, clinical events are based on facts, but the reaction of the markets for these clinical events sometimes do not make much sense. In the case of Cassava, it seems like there's a cult of followers, like the GameStop cult or the AMC cult, where they're just pushing the price up no matter the underlying value of the company. How can you fight ignorance, right? Sometimes, even if you short the stock and it makes no sense, people still rally and keep buying no matter what. So it seems like it's probably what's happening right now. But how can you fight that?
Yeah, it's a great question. I've certainly seen cults before. I think one of the things to keep in mind about markets is it's the marginal seller and buyer that moves the price of the stock. It's not the sellers that aren't transacting or buyers that aren't transacting. So all it takes is 1% or 5% of shareholders to say, I really thought this drug would work. It didn't work. I'm not crazy. I'm going to sell. And especially if they can sell at a price that doesn't evaporate all their money, and you usually want to sell before it is evaporated. So what I find is that even if 90% of the shareholders don't change, the price can still drop 90%. And putting new money to work in a stock that's failed is often something that's challenging to do. So I think that especially when your account values dropped a lot, you don't want to add good money to bad. And so I ultimately think it doesn't really matter. And certainly bad news the primary endpoint failing, it's kind of hard to spin. That's the nice thing about phase 3 is that you can build a kind of cult around ambiguous data, but you can't really build a cult when the truth has to come out. And when the sample size goes up, the truth tends to come out because the statistical evidence is more definitive. You have a really high power to determine what happened. And my guess is the ADAS cog change here will be very, very close to placebo. If not worse, I bet it will be worse than placebo. And that happens a lot in some of these trials where the drug just doesn't work at all, and it's like a coin flip. Because if you're giving two placebos, one placebo just might beat the other one by chance. So it's like a 50-50 that the placebo beats it. So I don't think it'll help in any way, shape, or form. And it was very close to what I'm describing right now, is basically what happened in phase 2. In phase 2, in the controlled withdrawal study, the drug beat the placebo by 1/6 of 1 point, an 8S-cog, which was very close to just basically flipping a coin or giving two placebos, green M&Ms versus red M&Ms. You're going to get that kind of result. And the p-value is 0.5, not 0.05, but 0.5. So pretty much guaranteed that this result was due to chance. They have this mild subgroup, which did half a point better than the total treatment group, but that's also kind of close to placebo. So I think the difference between the two groups will be something like 1/3 of 1 point for 8S-cog, and it's anybody's guess whether placebo beats it or drug beats it, but neither one would be relevant because you really need 2 or 3 points at least in 8S-cog to move the needle on the disease. And, they're just not going to get that given what we know about the drug, especially what we know, which is that the last time they tried to do this, they got half a point or 1/6 of a point. So in phase 2, I looked at a lot of Alzheimer's trials. You never go up in points as you go from phase 2 to phase 3. So it's really hard for your drug to get better over time. At best, it sort of is getting worse. So I feel, the only people I kind of feel bad for are anyone that's been sort of suckered into putting their whole portfolio in this. If you want to put part of your portfolio, I'm really, I don't, think that's a terrible idea. I do think you're going to lose your money, but you'll learn something about biotech. It's like tuition. You'll pay a little tuition, and you'll learn how clinical trials work, and it's not such a bad thing. But if you have your whole portfolio in this, you really have to, you really have a, penchant for gambling or a desire to hurt yourself, or, some people have self-destructive tendencies. And, I just want to make sure you have the warning. But if you also, think that you just have outsmarted everyone, then my advice is that you just take that skill, that amazing skill you have, where, if you think you can analyze biotech binary events better than me, I've made a living doing this for a long time, then I would say that just do half your portfolio or whatever it is, and you will prove that skill again and again and again. There's a whole calendar of binary events you can buy for $20, or just put one together yourself for free, and you can bet on these types of binary events once a year, 5 times a year, 20 times a year, it doesn't matter, and you'll be very rich. Because as you can see, these binary events cause huge changes in price value, in options value, and so forth. And if you really think you can outsmart me on Cassava, I'm sure there are people out there that are smarter than me in binary events. And if you're one of them, you will get very rich the next time another Cassava comes up, whether it's, you pick your publicly traded company, but there's a number of them that you can just see the binary events coming very shortly. Just take your wisdom, whatever allowed you to outsmart me on this one, and outsmart me on the next one. And, the marketplace is telling you you're wrong, by the way. The marketplace is telling you that, the puts to buy, the put options on the stock are egregiously expensive. People are tripping over themselves, willing to pay 40%. That's mob loan shark money percentages. Don't ask me how I know that. That's the rate of a loan shark. I'm willing to pay 45, 50, I'll pay up to 100% to borrow Cassava shares and short them because it's that obvious. And I once paid 200% to short stock of a company called Mankind. So, if you know what you're doing and you really think you're smarter, again, why take the massive financial risk when you can just take a huge financial risk? Don't put yourself out of business. Just if you have 100% of your portfolio, just do 50. You'll still be rich if you win, and you'll at least have some money left over if you lose. And that's just my prudent advice. I'm not here to talk down to anybody or tell them they're morons or say I'm better than you and you shouldn't own a single share. By all means, own some stock. My first couple of investments in biotech, my first probably 5 years, I was in stocks I had no business being in, and it helped me learn. The tuition was very valuable. One of the first biotech stocks I traded was Imclone Systems, which was a company that made a drug called cetuximab, and they got a refusal to file letter. even though every newspaper said it was a cure for cancer. It was on the front page of Time magazine, and little old me bought this stock, and the stock went down 80% when the FDA said their trials weren't good enough to get FDA approval. And I was wrong. And I was also 17. But I didn't know what I was doing, and I lost the very, very small amount of money I had in it. And I learned something. That was a very priceless lesson. You can see I still remember it to this day, 24 years later. Those whatever thousands of dollars I lost, I guess in today's money, probably more, there's tuition. And then I lost a huge boatload a few years later. I built up my portfolio quite healthily to around $500,000. I was 19. And I lost a huge fortune in a merger. The merger of Biogen and IDEC Pharmaceuticals cost me basically my whole portfolio. And I wish I had somebody to say, Martin, you don't know anything about merger arbitrage. Merger arb deals are complex. It's not really clear here what's going to happen in this merger. But I just said, I really like this deal. I think it makes sense. It's good for both companies. And I was wrong. The market didn't like the deal. It ended up being just a fine deal. But I didn't really understand merger arb. It was my first ever merger arb trade. And guess what I did? I put my whole portfolio in it. If I had somebody to tell me, Martin, put half your portfolio in it. It's still stupid to do that, but at least I would have saved half my money instead of torching it all. So if this is your first biotech big bet, why torch all of your money, potentially? You may be right. But if I kept, let's say I did half of my money in that Biogen IDEC bet, and I was right, at $750K portfolio, do you think I would be upset that it wasn't $1 million? No, I'd be thrilled with the return. It's just greed to say, no, I want every dollar. I put my whole portfolio in it, and I was wrong. So I lost it all. I went from 500,000 to like 2,000. And I remember being on the phone with E-Trade asking if it was a typo. It was not a typo. And those kinds of lessons are really valuable. And those are the tuitions I've paid over the years to know this. And now when I see new people, every few years there's a binary event and I short it, and everyone says, you don't know what you're doing, et cetera, et cetera. But it's nobody that's done this for a long time. It's nobody that stands up and said, I've been trading biotech binary events for 10 years, and you're wrong. It's always somebody that says, wow, this is my first biotech, and it sure seems like it's going to work, and this and that. And I'm just sitting there shaking my head. Like, I just hope that everybody's protected financially. As long as you're doing that, I have no issue with you. I hope you win for crying out loud. If there was a world where I can win and you can win, I'd be very happy. That world doesn't exist, but I don't wish anybody to lose money. I just think I know what's going to happen here, and I want to save the guy who's trying to pay his rent next month. I know, Matt Nacktrap should know better to put $70 million in a piece of trash. But, the person with 15 grand that has 12 grand in their account on it, that's not going to be healthy for them. We all want to make 100x in our money. My portfolio could sure use it right now, and I'm sure everybody else's. But at the end of the day, you have to be reasonable and logical about it. And there's no free lunch in the markets. If there's a 100x return, chances are it's not in your portfolio. Chances are it's probably in some venture capital fund that has really good connections with Silicon Valley, and it's not going to be some stock you stumble upon. Of course, there are stocks like NVIDIA that did go up 100x. But in biotech, I would challenge you to find one. It's actually very hard to make that kind of money in biotech, and it's more likely that you're buying a dog than not. So just leave room for that possibility. You don't have to liquidate your position. I don't want you to do that. It wouldn't benefit me anyway. Some people think, I'm just trying to scare you. I don't give a fuck. Stay in the stock for all I care. It's not going to change anything. The results are coming out in a few weeks, and it doesn't matter if you sell or buy, or you can buy 1 million shares. I didn't flinch yesterday when it was up 25%, and I'm not flinching now that it's down 20%. It's just a matter of, take care of your own portfolio, because I've been there before, and it just does not feel good after the fact. And all the dopamine rushes that you get now making the big bet, the feeling is 10 times worse when you lose the big bet. And that's just sort of where I'm at with it. So anybody else want to chat or have a question? Or
Balin here. Sorry, I was muted earlier.
Balin, sorry, I always called you Ballin.
Something, who cares? Yeah, I'm new, so I apologize. My verbiage is terrible. This is my first big short, and yesterday I flinched a little, but I'm safe and insulated enough that I can handle the big swings. But what I don't understand is that as a newbie trader, I I don't see how the volume and liquidity keeps entering in at such a rapid amount when there's something as blatant as a website like Cassava fraud or whatever.
Yeah.
Like, this is a lot more pertinent to like this particular biotech company, I'm saying. But somebody who trades like SVIX, a little bit of volatility, I know I'm doing stupid, degenerate things, but it seems more degenerate that hundreds of millions of dollars could enter this company yesterday. And I'm just a little confused on that, but
Sure.
I understand totally like SEC like delaying out filings and stuff, but it just seemed like so much liquidity that I'm stupid here, and I'm like, any help would be appreciated.
No, I don't think that's you're stupid. It's $1 billion market cap, and I'm just pulling up on my Godel, which is the alternative to Bloomberg I've created. I was going to say I'm pulling up on my Bloomberg, which I usually say, but I made my own version. It only traded 4.6 million shares yesterday, which, if you think about it, that's $100 million, and it's a 1.2 or so billion dollar company. So about 10% of the shares outstanding traded yesterday. Now that's a lot, but the company's entire existence comes down to the next 2-3 weeks. So at the end of the day, it kind of makes sense that many people are nervous. I'm sure somebody maybe tried to engineer a short squeeze yesterday. That didn't work very well. It had been known that I was writing a report. I was just showing myself writing the report, literally. So maybe there was a sort of timing with that. It could have just been a fund saying, I'm going to do this or do that. It's even though the stock trades around 1 million shares a day, if a fund wanted to buy or sell a couple million shares, they could easily move the stock. Then there's the options market. And then there's kind of this thing that's sort of come over the last 5 years where firms like Susquehanna, Two Sigma, and Jane Street have gotten very big, and a couple others have gotten very big by like just basically acting as market makers in options and equities. So even myself buying puts, they become short puts, and that means that they have to short the stock to hedge themselves. So there's a lot of weird things that can happen in these types of situations where there's a big pressure cooker, and people make adjustments to their portfolio at the last minute. I think there's people that know that this is the closest thing you can get to a lotto ticket in the stock market, where if you're right, you will make 100x. But in the lotto, you know what the odds are. You can actually calculate them. Here, I really do believe the odds are zero, and that's why I'm kind of sitting here folding my arms and saying, I feel like I have to say something. I also like the fact that I can kind of stroke my ego a little bit and preen and say, well, I know this drug's not going to work, because it seems like something like that could be random. And I don't like to stick my neck out for other things. Like Numora is a stock that I think will fail their primary endpoint, and there's a whole bunch of others I have just a list here, but I don't feel that confident that I'm going to write a 40-page report, publish it, make a website, put my name on it, do all that, because I just don't know. I'm not certain about everything. About once or twice a year, sometimes every 2 years, there comes something across my desk like this where it's like, okay, it just physically cannot work according to the laws of physics, chemistry that I've studied my whole life. I've seen so many drugs. It's just not going to happen. And, I wrote why. I only wrote probably about half of what I wanted to write. There's so many crazy things about this company. They claim that their drug, for example, works through a protein called alpha 7. But what's funny is somebody found that they actually use the alpha 1 antibody to run their alpha 7 experiment. And the alpha 1 antibody won't pick up the alpha 7. And so when you look at the results where they say our drug works through alpha 7, you're sitting there saying that you must have made those results up, right? Like how could it be that the alpha 1 antibody works on alpha 7? And the other data they put out is like clearly fraudulent, and the unprecedented arrest. I've been arrested myself. In the hedge fund world, getting arrested is kind of like a rite of passage. I'm joking, of course, it's not true. But, about 25% of the top hedge funds that ever existed got torn down by law enforcement. So it is a hazardous place to work, especially when you make tons of enemies as a short seller, as I have. science is not a treacherous place to work. You should be able to put papers out, publish, and not get arrested. And this is maybe one of the only times in human history where a scientist has gotten arrested for lying about their results. And maybe as we enter a bigger information age society, that'll happen more and more. But fraudulent science almost got to a point where we just accepted it. I've tried to replicate lots of studies I've seen in very prominent journals and have failed to replicate. And in weaker journals, like Cassava published in one journal where it took 6 days for peer review. And I can't even set up a peer review, for a big paper. Just the process of setting up a peer review after it's been accepted. It'll take a month or two at least to get accepted, another few months to do peer review. And if a journal is saying, okay, in 6 days you can go from submission to publication, that's not a journal. That's just a pipeline to printing. That's a self-print, basically. It's a preprint. So, I think that, it's fairly obvious what's going on here, but I think that lotto ticket is something that human beings just can't avoid. If you go back way, 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 way back, when I was, I want to say a teenager, I registered a few websites back when registering websites wasn't something you necessarily did. It was really early web days. And one of the websites I registered was called banthelotto.com. And as a teenager, a lot of teenagers have an activist streak. They march or protest things that they don't know anything about. You can think about what's her name from Greta Thunberg from climate change. For me, I felt that the lottery, which my parents played, was a poor tax. And it basically was my parents saying, well, we're not rich. We'd love to be rich. And I'm going to take $20 and try to be rich every week. And the reality is, if they took $20 and put it in the stock market every week, maybe that'd be a way to get rich. And so I kind of felt that the people that played the lotto were the ones that needed it the least. Rich people should play the lotto because they don't have anything to lose. Poor people have a lot to lose, and it makes more sense for them to save their money and invest it and so forth. So that was just one of these things that, I was, pretty passionate about back then, enough so to register a website. And I also, have done hundreds of hours or more of maybe thousands of hours of content on YouTube for teaching chemistry and finance. And some of those viewers have become billionaires, not as a result of my videos probably, but I'm very happy that they did very well, some of them. And others are just average Joes, and some of them have gotten promoted and stuff like that. So I love to teach and share the things I work hard on, I'm passionate about. And, ultimately this kind of strikes me as one of these things that it's fairly obvious, yet people still want the lotto ticket. And I think to the people who are self-destructive, I've been there myself. And in trading, you have to learn to not be self-destructive. Some people get it right away. They respect their portfolio. They don't want to cause it damage. Some people have to learn the hard way. Some people have to learn the hard way twice or 3 times. Some people never learn, and they just love destroying their portfolio. Whenever they get more money, they just destroy it again and again and again. And they should never be investors. But whichever one of those you are, Paul Tudor Jones once said, the best trading advice I have for any new trader is to cut your biggest position in half, because it's probably too big. And I think that's true. But again, those are lessons for down the road. The first lesson is, Cassava's, I think, not going anywhere. Anyway, anybody else have a question, comment? I'll add a few more people.
Hey, Martin, I've got a question.
Sure.
Yeah, my question is, I'm a Sava bull. With the 2 recent hires that were just announced, specifically the last one coming over from Biogen, with the phase 3 results so close to readout, what is your take on these 2 folks coming over now instead of just waiting till a couple weeks to see how this turns out, and then, hey, if it's favorable, then coming to the company? Why risk your reputation and leave a company to come over to Cassava Sciences now with the data so close to being released?
It's a great question. And of course, I respect all people, regardless if they like a stock or dislike a stock. That's not a reason to disrespect anybody. One thing to keep in mind about employment is that when you join, that's the day you get your options. That's the options price you lock in. So if you are going to get 2,000 call options for joining Cassava, and it goes up to 200, you much rather get hired at 26 than at 200. If that makes sense. You'd be leaving a couple million on the table. So if you're bullish on it, you'd join now before joining later. The next thing I'd say is, if you hire a headhunter and give them $100,000, you're going to find employees. It is not hard to find people who want employment. It could be something like they hate the job that they're at, they're moving. There's so many circumstances where people say, I've been at Biogen, they never promoted me. I'd much rather be a big dog at this company than a small dog at Biogen. It feels like a promotion to me. As long as the company's got the cash to pay my salary for the next year, I can't control if the drug works or not. My job is to control, whatever it is I'm doing, marketing, clinical trials, whatever. And if the drug works, great. I'm on the ground floor of something huge, and my options are going to make me very rich. Or I'll find another job in 6 months, the same way I found this one. And I just hang my hat and I have nothing to do for a year, which if I signed a 1-year contract or something, it's actually kind of smart. I get my options for free. I'm getting my salary guaranteed. If the drug fails, I basically got a year to look for a new job because I'm getting paid for a year. So it ain't a horrible move if you're looking for a new gig. If you're in a high-placed position where you're doing really well, I'm not sure I'd leave my job. And I don't think that applies to sort of either person that's joined Cassava. Biogen's sort of been on hard times for a while. It's not the Biogen of yesteryear. It's been on hard times for a really long time. But it's certainly, just because you hire somebody from a bigger company doesn't mean they're good. In the software world now, I've interviewed people at Facebook and Google, and they've talked about coming over to work at my company, and I wouldn't hire them, under any circumstances. And if there's people at Google and Facebook where I couldn't hire them under any circumstances. So big companies have geniuses, they've got mediocre people, and they've got terrible people. And you can't tell which one is which without digging really deep, talking to people in the industry, asking about their reputation, seeing why they left, all that stuff. They may have hired a fantastic person, in which case, good for them. They may have hired a terrible person, in which case, too bad. But I don't think either of those will change the results. And I certainly don't think anybody knows the results at this point, which would be, very remarkable if they were able to know the results and then tell the results to the prospective employee. That
was going to be my second part of this question was, do you think there are any NDAs signed when they come over, maybe some biomarker data that hasn't been released that they're sharing with the folks they want to hire? Because from all accounts, they have very good resumes from what I've seen.
Never say never, for sure. I mean, it's possible, but they certainly wouldn't have the ADAS-Cog data. And I do think that one of those two was not presently employed at the time. And I think the other one, I don't know what the circumstances are exactly, but if you're Rick, maybe you just want to, the executive team has been hollowed out a bit. Maybe you want to refill it, and you found a few people to help refill it, and that's fine, But if it seems to me like it would not be something where, sharing that clinical data, if I had the clinical data and knew it was good, I wouldn't be hiring anybody. I'd be putting out the results, saying I've got the next $5 billion drug, $10 billion, maybe even $20 billion revenue drug, and I want the best person at Amgen. I want the best person at Gilead. I want the best person at Eli Lilly. I don't think that's what's happened here. I think they basically, hired two people that, are joining the team, and that's fine. I've hired hundreds of people in biotech, maybe even 1,000. And, I think you don't give them non-public information. You try not to. And you basically just tell them what Wall Street knows. And, I'd be surprised if any more information went across the desk. But never say never. I just don't think my intuition and instincts are that it's not what happened, but it's possible.
Okay, thank you.
Sure.
Hey, Martin, and also it seemed like in the Q3 earnings call, the CEO was mainly pivoting maybe to a different trial. So maybe they could use some cash that they have, maybe do some offering, get more cash, and keep the company alive, trying to get another drug instead. Could that be a reason why they're having no hires now?
Maybe. Yeah, maybe. I mean, I think
Order
that
cancelled.
they probably have enough cash to move forward a bit. It would be very bizarre if they did an offering now. Borderline impossible, I'd say. Never say never. It'd be very weird when the results are about to come out. Certainly could do an offering after the results, good, bad, or even. But I think that Barry, I don't think he has any real intent to build the company up. He was pretty big in Sarepta, which worked out really, really well. And maybe that's what he wants to do. But I think that either this is going to be a really big asset or it's going to be worthless. And we'll know very, very soon. And then after that, if you want to keep the company around and build it up, and you can, there's certainly nothing wrong with doing that. But everyone wants to build a company in biopharma.
Order cancelled.
Everybody in the industry. And finding assets, you've got guys like Vivek and his team looking out for assets that are on the cheap. Everybody's trying to do the same thing. It doesn't mean you can't do it, but it's a lot of work and it's difficult and you have to have a competitive advantage, and they just don't have the team that can do that, in my opinion. Could they build it? Yes. Is that his ambition? I don't know. But, if this drug fails, then yeah, it's going to be a tough road back home. But in the drug industry, any drug can be the next big blockbuster. So, maybe they do find the next one. You never know. So hope springs eternal. But usually, once your main drug is toast, there's a lot of people that throw in the towel. They're pretty upset. They move on. They bought the stock because they wanted a big Alzheimer's cure, not because they want some other new thing. So, at least a few people would be disappointed, if not most or all. But you could stick around and try to see them rebuild over many years. They remember, Pain Therapeutics did that already. They had failures in 2005, and this is the rebuild of that. So if you want to wait for another potentially 5-10 year rebuild, you can. But I think most people bought this because they thought there was a 5% chance or a 10% chance or a 25% chance that the drug could work. Matt Nacktrab, who I think is the largest shareholder, he said there's a 95% chance it could work. But Matt doesn't have a history investing in biopharma, and he's going to start his history now, and it's not going to start on a good note. I tried to talk him out of it, but he really didn't want to hear anything I had to say. He's sort of chosen to look at things differently. Like, for example, one of the funny things he said in the past is he said that higher p-values are better. I'm not really sure what he was trying to say there, but a higher p-value means it's more likely that the results are random. In the drug industry, you don't want random results. You want your drug to shine out above any randomness that is in the system. You want your drug to look huge and clearly that it's not a coin flip, that it's massively good. It couldn't be due to chance. So he doesn't have a strong grasp of biopharma, and he's learning quickly, which is great. But I wouldn't be making a $70 million bet on a company like this, even if I was Bill Gates. You don't see people like Bill Gates or even Jeff Bezos and people like that making $70 million bets on kind of like crappy, cruddy companies. So it's a really weird thing to do. And I've seen it before. I even had my first big investor did it in this Australian biotech, and I tried to tell him over and over again to take his money out. And he was just like, Martin, I'm making my bet and I'm going to live with it one way or another. And it was just an emotional thing. And he lost all his money in that stock. And, I couldn't talk him out of it, even though I was his biotech advisor. So, sometimes it's just people won't change. They just want to see if they were right or not. And if they were right, they're going to be able to talk smack and hold it over, somebody's head and so forth. And, I just find it funny that I can't find a sophisticated investor who's done biotech for, say, 5+ years that actually likes this stock.
Martin, quick question. I'm just looking at the holders list, and you have the typical, BlackRock, Bank of America and stuff. But
Autofilled.
do you see anybody that's holding any lists on the holders list that has some level of sophistication, or I know that certain funds, like let's say Commodore Capitals, I think that they're very smart, and I kind of follow them and their holdings. But any listed anyone on this list that has some level?
Well, I'll go through it. I mean, BlackRock, Vanguard, State Street, these are Geo. These are all indexers.
Yeah.
Susquehanna and Citadel and Jane Street are market makers, so they're probably just hedged. Affinity Asset Advisors is, I think, a biotech fund. My guess would be that they're short. They're a biotech fund that focuses on binary events.
Okay.
And they have a position in the company. They're probably the biggest hedge fund in the company. But my experience with this kind of stuff is that they're short. I don't know those guys. I maybe came across them at some point in my career, but I certainly don't remember them. And if I look through the holders list, sometimes you can look through the 13F. Sometimes you can actually see that they own puts and stuff like that. And, there's something about boxing shares. If anybody's not familiar, boxing shares is when you long a stock and short it at the same time. And you might ask, why would you do that? You don't have any economic exposure. That's right, you don't. But when the time is right, you can short the stock. So I've just looked at their, my system is incorrect. I just looked at their investment in Cassava. It's all puts. So they don't own any stock. They just own puts. So that's an example there. There's one called LMR Partners, which again, I'm not terribly familiar with. I think that's probably the same situation. So, it's surprising to me because there was once upon a time, there was a company called Atherogenics, and Atherogenics had a big investor called, they were this big hedge fund that no longer exists. They were called, it sounds like Armistice, but it's not. It's Atticus. They were called Atticus Capital. And they were one of the biggest hedge funds in the world, interestingly. But they had this big, weird position in this stock everyone was short. And I got to meet the guys and got to know them, and they're perfectly nice guys, very smart. But they ended up being wrong on this one, but you could at least call them and they could explain why they had this big position in a stock everyone thought was a dog. It had the same situation as Cassava. It dropped 90% and they were never heard from again. But in that case, at least somebody owned the stock. Here, I can't find a person with a pulse that's a professional investor that owns it. So LMR is also has calls and puts, so they're not actually long. So to me, it's it seems like anybody I talk to that's a professional biotech investor is short, or they certainly are avoiding it as a long only. Usually there's somebody you can find that likes the stock as a contrarian or something, but I can't even find that. And I know a lot of people on Wall Street. I mean, it should not be that hard. Every fund I'm looking at that has a position is usually hedged or has puts or something like that. So I can't find anybody that has more than $1 million or something in there.
Okay. Well, it's good to know. Thank you.
Yeah. I mean, sometimes guys will buy it just for fun. They'll say, I'll buy a little Cassava. It might go up 100x. Shit, I got it. Anyway, who wants to go next? Potato?
I make a lot of money with crypto, but my country has a 40% taxation on it. How can I...
Okay. Damn Yankee?
How you doing there, Mr. Mount?
Good. How are you?
I couldn't agree with you more. I'm a part-timer biotech investor for the last 5 years. I got the bug of the M&A from IMDZ that was purchased by Merck. I think it was about 5 years ago. I have a question for you about, I don't mean to go off topic away from dementia / Alzheimer's disease. I was invested in one of those drugs, but it failed phase 2 clinical
Order
trial.
cancelled.
I want to ask you, speaking about billion-dollar drugs, Tesla's was purchased for $13.4 billion, I believe.
Yeah.
And I want to ask you, that drug is geared towards psoriasis. Is Otezla still relevant today for PD4 D subtype inhibitor? Or is there another drug out there
Order filled.
that's better than that?
Certainly not FDA approved. There is for Otezla is approved for psoriasis. It's one of the only oral treatments for psoriasis, so it gets used a bit. It came from Celgene. Celgene actually discovered that drug
Order filled.
by themselves and had to sell it to Amgen when they joined forces with Bristol Myers. The PDE world has not seen too much excitement. I think most people are more interested in like a direct mechanism like IL-13 or IL-21 or something like that. And so some companies are even doing oral IL-21s. But PDE, the phosphodiesterase PDE, is like this pretty vague mechanism that has a lot of off-target effects. There's also Daxis, roflumilast, and that's being developed for a number of different indications. But in terms of psoriasis, I think it's the only game in town. But its patent's expiring pretty soon.
Yeah, that's what I was going to say too. That their patent is up for expiration soon. I don't know the exact date on that. Can I move on? Really, one more quick question to you about type 1 diabetes. You know, I know Lexicon has been trying mercifully for years to try to get their type 1 approved by the FDA, but again, recently they were rejected once again. I think I believe both the AdCom. I'm not sure if the FDA ruled on it yet, but also AstraZeneca was axed in Europe. Both of those drugs specifically, I think Zynquista and Forixca.
Yeah.
There was no other drugs out there. I know one of the companies I'm invested right now is trying to capitalize on that. Victor Tango with the TTP 399 drug, but obviously they had a clinical hold on the drug and for additional studies. Can I ask you, do you know of any other company out there that are working on I would say outside of the oral type 1 diabetes drug?
Yeah.
Do you know of any prospective company that are working on it, specifically phase 2 or higher?
Yeah, Vertex is the leader in this space where they're developing a cell therapy for type 1. They seem very committed to curing type 1. They had the same kind of attitude towards cystic fibrosis. They did really, really well with their CF franchise. They're now one of the biggest drug companies in the world. So it's not like a 10x upside kind of company anymore. You know, they already had their 10x moments several times. So it's a pretty big market cap. But Vertex VRTX has probably the most promising type 1 cure strategy. And I do think the day is coming when, you know, we will see type 1 go by the wayside. You know, I don't think you can just take the type 2 drugs and throw them at type 1. It's a really fundamentally different disease. And that's why the lexicons and so forth have had a hard time. Type 1 is, you know, it's very, very different. It's an autoimmune disease. It's really long-term disease. It's like totally tricky, but I do think that Vertex is leading the way there. Let's go on to Andy, who I think wants to say something. And then, again, I'm looking for anybody who likes Cassava to throw out their 2 cents.
Hello?
Yes.
Martin, can you hear me?
I can.
Order
Hi.
partially filled.
Good afternoon.
Order
I'm
filled.
Andy. I think I've
Order partially filled.
previously emailed you or messaged you in here.
Cool.
Thanks for providing the space. Quick question on the way to play it. So you're massively short via common.
Yes.
I'm looking at the implied volatility on these weekly strikes, and they're obviously very rich premium. So why not, short calls, with a different expiration date instead of just commons? And I'm looking at the option flow. There's actually a good amount of people buying short-dated calls for early December, so I'm assuming they're trying to squeeze people out, then knowing that it might come later.
Some of that is me buying calls to magnify my short position. So I think
really out of the money.
Not really out of the money.
Like 40, 44.
Yeah, those I think are hedges too. My partner pointed that to me yesterday. There was some unusual flow.
That's right.
There, and he thought those were hedges, but clearly, it could be somebody bullish, and that's fine, or somebody trying to squeeze. I try to just focus on my own thesis. I don't love talking to other traders, only a handful, and I think if you pay too close attention to the market prices, you kind of go a little crazy. So for me, I'm happy with my strategy. It's a high. There's no free lunch, right? So my strategy burns theta. I lose tens of thousands a day, on theta. And, that's the downside of my strategy. But the upside is I don't fear the stock going up a ton, although I wouldn't want it to happen. I don't care what time it comes out, other than I'm losing my theta. But I'm not all in on, say, one date. I can spread that risk a bit and add to my position. If I lose that theta, I hope to make it back on the eventual date. Now, if you are just long vol, you obviously have tons of risks. If you're short calls, you're taking this very open-ended risk that could, result in a really bad situation if there is a positive event. If you're not going to make this your whole portfolio, I think that's probably the way to go. Because if it's delayed, you win. If it's bad, you win. If it's good, which seems extremely unlikely, you will lose. But in most situations that are realistic, you make money. So I think the short call strategy is really good. The most you can make is 100%, which is still a lot. But you'd have to put a couple percent of your portfolio or more in it to matter. And in which case, you're probably going to be out of business or wiped out if it does work. Now you could short a call spread, you could do other things like that, but it's everyone has to decide for themselves what they're comfortable with, and some people have portfolio margins, some people don't, some people can't trade options, some people can, some people have prime brokerages, most people don't. There's all kinds of questions as to how to get this right perfectly, and I've purposefully tried to sort of stay away from coaching anybody on how to do that, because everyone has a different broker, everyone has a different amount of money, everyone has different goals and needs. If you want to go all in, make a fortune here, the way that I'm doing it is probably the way to do that. If you want a safe, conservative 10 or 20% or 30% return in a short period of time, buying puts is probably okay, especially if you can sell calls and neutralize that calendar problem. Selling a call spread's probably even better. You could sell a call spread every week, theoretically. So there's a lot of ways to do it, but my way is a magnified return, magnified risk way. I have very high conviction, so I'm willing to do that. But I can understand if somebody's listening to this and saying, "I like what he's saying, but I'm not him, and I don't have the conviction he has. I don't know this guy from a hole in the wall. Let me just make a small bet." And yeah, in that case, I think the December puts or the January puts will make you a little bit of money, and you could just dip your toe in for whatever is a very small amount of money for you, whether that's $500 or $500,000, whatever small is small for you, and you just say, "I'm going to check this out and see how it goes." And it's all up to the person. So for me, I have my own financial kind of goals and my own financial, kind of, parameters that I'm going to stick by regardless of other people. And I think we all have to respect each other's kind of goals. So otherwise I would tell everyone to do my trade, but it's probably not right for most people. Cool. Anybody else want to chat? Like I said, I'm happy to talk
Waterfield.
to Cassava Bulls. I know nothing against you. I don't wish you losses. I do think you're in a bad stock, but it's not personal. This isn't shorts versus longs. I think people try to confuse this issue by trying to act like you're in a war and you're on one side and your side's going to win. The only side you should be on is trying to make your account as big as possible. And that's it. And it doesn't help me at all,
Waterfield.
for you to sell, other than, especially the way my position is constructed, I really only make money if the stock drops
Waterfield.
like a rock. Many people who own puts are the same way. So it really doesn't matter if the stock goes to say 20 today. I'm not really not going to make much money. And I can't just ethically, I don't feel comfortable just pulling out just because it went to 20. I'm here to see it through to the end. And that means low single digit stock price. So the whole long versus short thing, we're on different sides of the trade, but, share information that you think the other side is missing. So you could have a constructive dialogue where you can learn
Waterfield.
something and say, I didn't think of that before. And that's happened. I've gotten that from plenty of people who are long cassava, and I looked into it. I
Waterfield.
learned more, and I still have the same opinion I have. But it's useful to have that constructive dialogue. And if somebody is making a big bet opposite you want to know why. And if you can't convince the other guy, or they say, well, that doesn't matter because of XYZ, and you can disagree, but it's always good to have everyone's cards on the table if you can have it. And I'm one of the few people willing to do that. Obviously there's a couple of guys that shorted it, wrote a thing to FDA, and those guys are very smart and everything. But I have a lot of experience in industry, making huge bets on clinical trials and drugs, and I put forth kind of a different angle. Those guys are like very good biology guys. I'm a very good chemistry and clinical guy. It's two different parts of the equation here, and all the stuff they've said on biology seems right to me, and it's pretty terrible news for cassava. Like the whole idea of having the wrong antibody is just mind blowing. But for me, the clinical and the chemistry side are really bad, and anybody that knows that side well is welcome to sort of explain to me. The problem is that there are a lot of people that really are brand new, and I'm happy to talk to them, but it's sometimes the best teacher is just seeing it for yourself. Okay, anybody else from Team Cassava? Don't be shy.
Hey, Martin. Just
Order
you might
cancelled.
have said this before or not, but I mean, you seem pretty adamant, pretty confident as in terms of the science not working. I mean, is there any remote possibility? I'm just trying to maybe understand. You have a very high conviction level. I'm sure you have your reasons, but I guess taking the other side of the argument is
Sure.
hey, what is where is there, and again, not being a scientist, where's the possibility of science working?
Sure, I can go through that. Just give me half a second. Eventually, yes. The doorman doesn't know she lives here yet, I guess. But anyway, the answer to that question is really interesting. So one of the ways I look at these binary events that served me really well over the years is the necessary but not sufficient sort of list of things that have to happen for a drug to work. So that list is really interesting here. for a drug to work, a lot of things have to happen. And if the probability of those things happening is very low, once you multiply them all together, your probability ends up being exquisitely low. So even if there are 4 things that have a 50-50 chance, you end up with a very, very small, it's like 6.25, I think, chance of it working. And I think I convinced fairly easily that there are probably about 10 things in the Cassava situation where the chances of them working out are way worse than 50-50. And so if you believe those, you have a really, really hard time seeing it through, even if one of them is like palpably wrong. For example, one of the key things here is that this protein that they're targeting, filament A, has never ever been shown to be involved in Alzheimer's at all. And that's, a really bad thing. The only people that have ever shown it to be involved is Dr. Wang, and his work, I think, has been proven to be a fraud. I don't care about his criminal indictment. I've been indicted unfairly myself. The feds will do whatever. But if you just look at the work, it's not real. And I think that that's very hard to get over. But even if you got over that, you have these other problems that are going to be very hard to sort of get over. The main thing is the clinical trial data are really bad. They did a clinical trial, and the drug did not work. And they advanced to phase 3 anyway. And it was really this like wishful thinking or copium, because I think the CEO and his wife went through this really terrible period where, and I was a shareholder actually back then because the CEO was my boss's college roommate at Oberlin. And, the boss just was friends with him, and we owned a bunch of stock, so I had to follow the stock really closely. And they had 3 drugs for pain. One was for IBS, actually. The two drugs. Could you just go on mute real quick, because I'm hearing your background. Thank you. So they had 2 drugs for pain and 1 for IBS, and all 3 failed after phase 3s. And I think they maybe looked at this and said, maybe emotionally they weren't ready to make a rational decision or to call it a failure. And I think if you look at the phase 2A data and how Dr. Burns, this is Remy Barbier's wife, she took the data and she just jumbled it up until it showed that the drug worked, which is really crazy thing to do and a criminal thing to do. But she did it anyway. And knowing the world of crime a little bit, I can tell you that the psychology of people who do crime is not that they're bad people. It's that they, for whatever reason, sometimes they're bad people, but for whatever reason, at that moment in time, they feel like they have no other choice. And that could be because they're desperate. It could be because they're building a false image. It could be any of those things. At that moment in time, she decided that instead of releasing the real data, she was going to cut and spin that data until it made the drug look good and then release that and not tell anybody. That is fraud. It is something you can go to jail for, but she did it anyway. And I think there was this impression that they had this drug company, they're really proud of it, they spent a lot of years on Simifalam, and then to just come out and say that it doesn't work would have been so painful psychologically. And this is something like this happened to my hedge fund that I got indicted over. Again, I would argue it didn't rise to the level of criminality, but I'm sure Dr. Burns is arguing the same exact thing. So sometimes if you're in this emotionally desperate state or this very attached state where you just can't come to grips with a failure, you will lie about it. And I think that's sort of what happened here. But regardless, you'd have to sort of exclude, to your question, you'd have to exclude so many things and explain so many things. For example, one of the things that explains what I think is really, really bad clinical trial data, one of the things that explains it theoretically is that this drug is so good that when they switched patients from drug to placebo to do the placebo-controlled study, even though the drug has a 4-hour half-life, meaning it is gone from your body in 24 hours, most of it's gone in 12 hours, it's all gone in 24 hours, that because they were on the drug for 12 months before, the drug still kept working after you stopped taking it. Now, the New York Times said I was an encyclopedia of drugs, a walking encyclopedia of drugs. And Vivek Ramaswamy said I knew almost every drug company better than the people that worked at the drug company. These are both in print. You may dislike me, but I know medicine. And I don't know of almost any drug that works that way, because the rules of pharmacology state that if a drug is out of your bloodstream, it cannot keep working. When I stop taking my asthma inhaler, I get asthma again. It doesn't magically keep working. When I stop taking, an anxiety drug, I start getting anxious. It's just the way medicine works. And there are situations in medicine that are very rare where this is not the case. But you're talking about a 1% chance. And when you look at something and say, well, what if it's that 1% chance that's actually happening and not the 99% chance? That's called copium. You're constantly trying to cope with the fact that you're wrong, and you're saying, well, there's a 1% chance of this, and then there's a 10% chance that this is happening, and a 3% chance that this is happening, and I can ignore the indictment of the scientist because, well, there's a 5% chance that the FBI is wrong. You're just adding all this up, and the actual probability that all those 1% chances are in your way and on your, kind of on your, that you're right and all those unlikely to happen events are going to happen, it ends up being zero. And I did this before with a company called Vital Therapies. I wrote a long, long paper about Vital Therapies, and I just decided at some point that there is no chance I was wrong, not because of hubris, but because of the physical impossibilities of, kind of the situation at hand. So, like, a good example is, I can tell you that I'm going to throw a baseball, and you're going to have to bet on where it's going to go, and you can bet that it'll go 50 yards, 100 yards, or 200,000 yards, and you can say for certain that it's not going to go 200,000 yards, and somebody might say, yeah, but you don't know if it does. And you would retort by saying, well, actually, the furthest anybody's ever thrown a baseball is this far. Marvin doesn't look like he can throw a baseball as far as a professional, at least, or anybody else. And I'm pretty sure it's not going to go 200,000 yards. And the response would be, well, you don't know for sure. And the answer is, at some point, you do have to be able to make the claim that you do know that's not going to happen. So I think that that's kind of the situation this is to me. And maybe that comes with experience. Maybe I am wrong, and I'm going to be proven wrong. But if you read my thesis, I think you'll sort of see what I see, especially if you've been there. So a friend of mine has been a top-rated Wall Street biotech analyst for a long time. He's on the sell side. And he sent me a nice note where he said, I gave this to all my associates and said that this is a master class in analyzing a drug and that everybody should read this. And I was very flattered. I've known this guy a long time, and yeah, he's a friend, so maybe he was just being nice to me. But I was happy to see that, and I think that I would love to see the opposite. Or again, that's why I'm posting this space. I was like, can somebody point out one thing, just one thing where I'm like distinctly wrong about it, and I'm happy to sort of go through that. And again, I'll learn more, and we'll all learn more, which is a good thing. Hello. Anybody home?
Yeah, excellent. Well, I'm spending all weekend reading the papers. So.
Oh, great. Yeah, and I really wrote about half of what I should have and could have wrote. I felt like maybe the results are coming soon, so I wanted to get it out there. But, so I'm probably going to supplement it a bit. But there's so much about this company that's going wrong and the market, for whatever reason, likes it so much.
Order partially filled.
That I just want to help those people not jump off a cliff or lose their shirts. And again, if they desperately want to lose their shirt, I'm going to let them. I can't change their minds, but just a fair warning for anybody brand new to the space. I don't want to turn off people to biotech. If this is their first thing, I'd rather them not lose it all on this trash company and trash drug.
Hey, Martin, a quick question. So you've just said that the market seems to love this company even though the underlying value is not there, or at least it's not being shown, or it's very unlikely to be there. Have you seen in biotech the opposite, where there's extreme value, but the market is just failing to recognize it?
Yeah, all of the above. I mean, one situation that's very, very, very similar, and you'll see why in a second, was Elan Pharmaceuticals. Elan, and I was largely tricked by Elan. Smarter people than me were not, but a number of people on Wall Street, we bought Elan Pharmaceuticals. They had a deal with Wyeth, which became Pfizer, and it was for the first ever amyloid beta drug, and the trial failed. The company was worth $30 billion, and this was before phase 3 data. So Cassava is only trading $2 billion, and this was 10 years ago. The $30 billion is worth more now. And the company's stock went from $30 billion to basically zero. And, we were all duped. So here at 1 or 2 billion, the market's not really that fooled, because it could be 30 billion like Elon was. And Elon only owned half of their drug. Remember, Wyeth, the big pharma company that became Pfizer, Wyeth owned the other half. So it was like half of the drug trading for 30 billion, and that's before phase 3. So the fact that this is 1 or 2 billion,
partially filled.
There really
Order
isn't, that many people that are that, convinced by it. Nevertheless, there are a lot of people, like the GameStop or AMC phenomenon, there are a lot of individuals that are in it. And most people lost money in AMC, which 2 years ago, when I got out of jail, that was the stock everyone wanted to know. What do you think about AMC? I just said, I don't know AMC. I'll look at it. I looked at it and said the stock's dog shit. And it went down 95%. The whole AMC community hated me. And I can't afford to have more haters. I want people to like me. But I'm not going to tell you it's a good stock if it's a bad stock. And hopefully that trumps everything. But no, the AMC guys dug in, lost all their money. And I don't know who they're blaming, but, they have nobody to blame but themselves. And Sava's going to sort of be the same thing. But, there are situations that are much bigger than that. It's like I said, Elon was massive. And then the other situation has happened many, many, many times. I'm trying to think of a couple of good ones, but Alexion was one of my favorites that just went up a huge amount. Viral Pharma was another one that was early in my career that kind of made my career. There is value in biopharma companies. It's Pharmacyclics was another one where Pharmacyclics had some decent data, and it was still only trading for a couple billion, and it would end up getting bought for 20 billion. It's rare that biopharma stocks stay in the gutter for many, many years. The most I've sort of seen them plod along is a year or two before they start to get recognized by the market or by big pharma. But every company has a story. Vertex went through many, many billions of dollars and failed like a dozen phase 2s before their cystic fibrosis breakthrough happened. So, it depends on what kind of company it is and stuff like that. So I do think, with the right management and new drugs down the road, even Cassava can turn themselves around. But, this isn't going to be the drug that makes Cassava successful, unfortunately. Aziz or anybody else want to?
Yeah. Hi, Martin.
Hi.
I don't usually listen to streamers to get my financial advice, but I am heavily invested in Sava, and my Generation Z friend told me that you are strongly against it. So I'm just
to be clear, I'm not a streamer, but that's beside the point.
People who give advice to the public on whatever Twitter Spaces, fine. No, I understand that. I've never done this sort of thing. That's all.
Understood.
Why did the FDA approve phase 3 trials if there's no efficacy, as I feel like you might be saying?
So the FDA, that's not the FDA's job. When a company files for a clinical trial, the main concern of the FDA is toxicology, and that there's so-called toxicology coverage for doing that trial. As long as there's enough animal data coming from 2 species of significant length, typically you need 6 months, 9 months, sometimes a year. And if you've done 2 species, usually it's dog and rat, those are the 2 cheapest ones, you can do basically any kind of study you want. Now, if you've had a lot of side effects and stuff like that, that's a different story. But as long as your drug's not hurting anybody, there's no approval or non-approval process. There is something called the study may proceed. But typically when you file an amendment to what's called an open IND, initial drug application, what you do, or initial new drug application, when you add an amendment to your IND, sometimes it's called a series. This is like very in-depth industry jargon, but you file your new series filing to the IND stating what study you want to do. The FDA has 30 days to tell you no. If they don't,
Martin, I just want to know why they would send it to phase 3 if they know the drug would fail.
That's a good question too. I think the compensation rewards, and I just want to finish the first question. The first question is basically, why would the FDA let them do phase 3s? And the answer is it's sort of just the FDA's job to say, we won't let you do a trial if there's a tox problem. Like if you do 2 weeks of tox, you can't do a 6-month human clinical trial. You certainly can't do it 1 year. So they need a substantial amount of tox, and that's what the FDA is for. Now, filing to sell the drug as a prescription drug, that's different. The FDA says yes or no on that. And they think about that for 12 months, and then they decide on the new drug application, the NDA, as opposed to the IND. So in general, that's sort of the situation. It's really just a tox question. In terms of why would the company do it? That is a great question, because I can't imagine a company that would look at the phase 2 data and say, this is good, I want to invest more money into this. And I think that the only thing I could come up with is what I said earlier, which is I know Remy. I met him just exactly 20 years ago. And he was the founder of Pain Therapeutics, the CEO. And he's been through 3 big FDA failures, or 3 big clinical trials / FDA failures. He renamed the company, his baby, after a huge failure, crawled all the way back up from like $1 a share in stock price. And he has this drug. And for whatever reason, he and his wife and the chief scientist, they couldn't see reality. They were blinded by their past failures, the PTSD from that, the whole just like, I think history of the company. Any rational pharmaceutical company, I always had like 5 or 6 drugs in my pipelines. I would just say, okay, I don't need this drug to succeed. I will cut it. It's unlikely to work. Let me invest in the drugs I have that are likely to work. And I can always buy a new drug or find a new drug. Look at Vivek. He's found hundreds of drugs from Big Pharma. So just cut it and move on. But some people say, no, I really want to see in the big trial whether or not it'll work. Now, in the big trial, there's still some randomness in the phase 2 trial, but the likelihood of this big trial working is very low. Anybody could see that, but sometimes you just want to know. So in poker, it's a good example. You have a 2 and a 7, and the other guy's acting like he has 2 aces. An ace comes on the board. You're saying they're saying, oh shit, this guy probably has 3 aces now. And then a 2 comes on the board. You're saying, wait a second, now I have a pair of 2s. A pair of 2s doesn't beat a pair of aces, or 3 aces for that matter. But what if another 2 comes out, and he bets a big bet? Now you probably should fold your hand. But some people who are bad at playing poker may say, you know what, I really don't want to throw away these 2 aces. In poker, you can just wait for the next hand. In real life, there's emotions. Even on the poker table, there's emotions. But in real life, there's way bigger emotions. I just created this company. It failed for the first 10 years. I'm finally crawling back. I would hate to say I failed again, because I might have to get fired by the board, et cetera, et cetera. Let me just act like this was a success. And this happens in biotech. There are plenty of companies that will pursue a drug all the way to phase 3, even though it doesn't work, and it's a waste of shareholder resources. For whatever reason, that was the game plan. And it didn't end well, because Remy was forced to resign from Cassava, along with his wife, and they both got sued by the SEC, and they settled, and the chief scientist got arrested. So I don't think anybody in their right mind, looking at what happened, if they knew this would happen 2 or 3 years from now, they would never have done that. But I would also say, why would his wife decide, if you read the SEC lawsuit, it was very clear that his wife took the data, the whole data set. In biotech, in clinical trials, if you have, say, 50 patients of data, you're supposed to show the 50 patients of data. She saw the 50 patients of data, saw it was bad, and said, I'm going to just show 25 patients because that makes it look good. And she came up with an excuse as to why it was logical to do that, but it wasn't. You always have to show the full data. If you want to show partial data, you can explain why, but only after you show the full data, because it's misleading to only show the partial data. That's like saying, well, my hedge fund made a lot of money. I'm just not going to show you all the losses I had. Of course, it made a lot of money without the losses. So, this is just plain and simple fraud. And she's lucky she hasn't gotten arrested, because what she did is way worse than Dr. Wang, who also played around with data. So it's a company that's played around with a lot of data, and that's not something that's rational. So doing another thing that's irrational and starting a very expensive, probably about $100 million, phase 3, really irrational to do. You wouldn't do it with your own money. And I always acted like my company's money is my money. And I think for a lot of publicly traded companies, they just sort of say, okay, well, if the shareholders will pay for it, they'll pay for it. Who cares? So I don't know what their way out of this was. Was it going to be more fraud? Was it going to be what exactly? I don't know, but it was definitely a crazy idea, and it's bitten them in the behind. But that is all in the rearview mirror. The big question now is, well, what is going to happen to this drug? Will it work or not? And we know in the next few weeks whether it'll work, but it certainly seems extremely risky. And that's why I just, like I said, I'd love to repair my reputation, which I think I got unfairly. One of the things that I'm happy to do is share my knowledge of biopharma. I'm not telling anybody to sell all their stock, but if you only own this stock or you think this is a huge part of your portfolio, that this is going to be a big winner, just recognize that it's very risky. That's all I'm saying. I don't want to say the sky is falling. Of course, you know what I believe. I believe that the drug doesn't work. But I don't want to be accused of trying to manipulate you or change your mind. I would just say if you have 100% of your portfolio in it, try 50%. You'll still make a lot of money if you're right. And you get to call me an asshole and tell me I'm wrong and how bad I am for the rest of my life. But I'm willing to put my name and reputation on the line that this is not going to happen, and my money. So we will see. But that's kind of the way I come out at it. I don't think that the company has behaved very rationally in general, and I think that's kind of clear to see. 99% of drug companies don't get sued by the SEC. They don't have their scientists arrested. So there's a lot of irrationality going on kind of regardless. And again, it could be that they're just being picked on for no reason. But you'll have to admit that that probability is not 100%. It's probably like 10%. But even if it was 50%, you still are batting with 50%, that actually the FBI is right or actually the SEC is right. And I hate the SEC and I hate the FBI. But sometimes they're right. When they arrested, when they arrest a murderer, they're right usually. When they arrest a terrorist, they're right. When they arrest a mob boss, they're usually right. Now, they may have arrested Dr. Wang, and they're wrong. And I think it was really inappropriate to arrest him at all. But there is a chance they're right. And it's not 1%. It's probably 50-50. And you're already saying that there's a 50% chance I'm going to lose all my money. So it just makes sense not to have all the risk in the world and just wait, and see what happens with half the risk. And if you're comfortable and most people don't go all in. So if you're not all in, this message isn't for you. Good luck here in your bed. I don't really care what happens. I only care about the people that are so all in because they're been lied to or convinced that this is the next big thing. Those are the people that I'd say just take your foot off the gas a little bit, because this is a very dangerous situation and it's not likely to end well. But as long as you are diversified, I don't care what happens to your portfolio. But if you're all in, I feel bad for the little old lady going to the grocery store.
SEC announces enforcement results for fiscal
pension
year
money and buying a bunch of lotto
2024.
tickets and playing with the scratch off and putting in the Powerball numbers because she's not going to win and she's wasting money that she needs to eat. So that's kind of the way I look at this bet. And, I don't know if that's something that'll make me a good guy to most people. It seems like most people are mad because they don't want their investment being trashed. But, sometimes the best news for you is the hardest to take. The best advice is often the bitterest pill to swallow. All right. Anybody else? I think I should go.
Yeah, Martin, yesterday you talked about how you envisioned that the company would reverse merge after all this conundrum unfolds. But my question to you would be, what company would accept to reverse merge with Cassava, and what would be the motives behind a reverse merger? And what would another company benefit from doing so?
Well, reverse mergers happen all the time in biopharma, even after companies fail clinical trials, or usually actually especially after companies
Or
fail clinical
canceled.
trials. One company I shorted a lot of was called Telic way back in the day, Telik. They were a cancer company. I predicted their phase 3 trials would fail. They did. The stock went down like 95%. And then I actually met with the company to reverse merge my company with them. So, if you're a privately held company, you'd like to go public. And one of the ways you could go public is a reverse merger. So it's kind of a nice way to go public without doing the whole IPO stuff. You just can quickly, in one agreement, you can be publicly traded in three months. You get their balance sheet, you get their stock ticker, you get their name. You can change all those, but it's really nice and easy to do that. So I think that usually in those reverse mergers, by the way, the new company that's private will own 90% of the old company that's public. That's why they're called reverse mergers. Otherwise, it would be the other way around. So you're really giving away the company to a new company because you're not worth anything anymore. And this has happened a ton of times. And sometimes it's successful. Ironically, usually it ends up being that the reverse merger company has to reverse merge yet again in a couple of years. But there have been situations. I was short a stock called Synta, SNTA, for many years. And they had a very famous investor who was extremely smart at macro investing, maybe one of the best in the world, super rich billionaire. And he had all this money in this cancer company, but their drugs didn't work. And the stock went to basically nothing. And they reverse merged with a company called Madrigal, MDGL, which ended up becoming a fantastic company. And the billionaire ended up selling all of his stock, pissed off at Synta, and he could have had a great run with what was left in Madrigal. So it's kind of ironic. But, reverse mergers happen all the time, and there's no, rhyme or reason to them other than one thing that you can bet on is that the reverse merger company is going to only own, the old company is only going to own 5% or 10% of the new company that reverse merges. So the shareholders, they don't get wiped out, but they get very diluted. And, it's very hard to make a lot of money after a reverse merger. But there's a lot of options for Cassava after the failure. I mean, you can license a drug from Big Pharma for $1 million. You can go to Pfizer or Merck. Vivek and I used to do this all the time. You go to Pfizer or Merck or Eli Lilly and you say, what do you got? What have you dropped? What drugs have you basically, when I say dropped, I mean, have you abandoned? And what will you sell me? And sometimes they'll call us and they'll say, hey, I got an idea for you. Do you want to develop an Alzheimer's drug? And they did this, GlaxoSmithKline did this for me and Vivek. And they said, we have an Alzheimer's drug. We're not going to go forward with it, but maybe you want to go forward with it. And of course the answer is, well, why don't you want to do it? And usually it's because the drug doesn't work. But they'll take $1 million or $2 million. Vivek paid $5 million for this drug. And, they'll sell you a new drug and you got a new lease on life. Maybe that new drug will work. So there's always life after death, but, it's still a new road to climb, this long hill of, okay, I'm going to pay the money. I'm going to get drug made. I'm going to do a new clinical trial. It's going to be a couple of years before I see something new. So I feel like, that road is always possible. But I think that Remy and his wife really couldn't accept the failure of Semifilam and start over because it was just too painful. They had done that for the last 15, 20 years. And they were so close to success. And unfortunately, you can't force success, which is something I also had to learn early in my career in hedge funds, going through a lot of the same thing, quite frankly. The psychological result of failure is so punishing that you would just rather not admit it and kick the can down the road, but eventually the truth will catch up with you. So, it's something I learned a lot from, and I think it can happen to anybody, especially just, it's perfectly good people. They feel like they just can't let people down. And that phase 2 data was so bad that they basically manipulated it. And the next phase 2 data they had was so bad that they contrived this crazy explanation for why it was actually good data. And it doesn't make any sense. But some people believed it, and I just want to warn those people not to bet their life on it. If they didn't bet anything on it, I wouldn't make any money. So I want them to bet something. But I need the market to be somewhat irrational. But I don't want people to lose their houses over this. If they, Matt Nacktrap's going to be rich no matter what. But I want to make sure that everybody is going to, not get totally hosed in this. And I have agreed to shave my head bald live on YouTube if I'm wrong. So, what's up, Yashiro? We've talked for many years.
Martin, what's up, my man? Sheepa.
Yes, sir. That is me.
Hey, a couple of things. One thing yesterday that a guy conflated when he was criticizing you. A bet that you make on a company based on publicly disclosed information has nothing to do with the reflection of your moral character or your desire for a specific trial to not succeed. So he was saying your capitalistic nature and how are you betting against Alzheimer's, your position that you're going to take has no effect on what the data is going to be. Is that not correct?
Yeah, totally. I mean, I can't change the drug. I can't change if people are getting better or not on this drug. If the drug, once you set up a drug, you cannot change the molecule midstream. That would be a new drug. So they've made this drug 15 years ago. And what you and me say about it is not going to change it.
Exactly. And do you not see, I've been following you for years, and obviously I feel that your greatest wins have been on the short side versus the long side. Is it easier in the biotech world to say that a drug will not work based on the chemistry and biology information that's available versus this drug possibly can work?
I think sometimes it is easier because the signs are there. Like the subgroup analysis, it's hard for most people to understand subgroup analyses and why they don't make sense. But once you get it and it clicks, you will never trust a subgroup analysis again. And the same thing applies to open label data. You might look at open label data and say, oh, who needs a control group? Well, it's not an experiment unless it's a control group. It's just bullshit. And for a lot of people, they say, well, no, look how good they're doing. And it's like, you just want to shake them and say, that's not how it works.
Autofilled.
And they say, yeah, but they're not supposed to be getting better. They're supposed to be getting worse. They have Alzheimer's. And it's like, look, that is just not how this works. You don't know. Nobody's taught you enough about this yet. And, you're going to learn the same way I learned, which is by losing a bunch of money. And then eventually you'll figure out that an open label trial is subject to gigantic amounts of bias and variance based on just how it was set up, and it's not reliable to look at this as as a controlled experiment when it's not a controlled experiment. So that's kind of the signs are all the same, and I don't make big short bets and big gigantic announcements if I'm not sure, because there is uncertainty in pharma. There is a ton of uncertainty. Sometimes a drug you thought wouldn't work does work. For example, I didn't think the Moderna vaccine could work. But I didn't make a big stink about it. I just sort of said, we'll see what happens. And I was wrong, and that's fine. But I didn't write a 38-page report and take out a multi-million-dollar short position. I just said, we'll see what happens. I'm not sure. But if I'm sure, it's because there are so many things that have lined up that it's like, there's just no way out of this thing. And I've only come out and said this kind of stuff about once a year privately, and publicly maybe once every few years. So this is one of the few times I'm willing to put my head in the guillotine and say, listen, if I'm wrong, let the blade drop. So, that's kind of how strongly I feel about it.
Well, listen, I'll end with one logistical question, but before I say that, no matter the academic competence or intelligence any individual has, one of the greatest abilities to achieve success, in my view, is your ability to withstand stress and hardship. And you, my friends, in my eyes, have one of the greatest resilience factors that I've seen in anyone. So there's no one rooting for your success more than I am. I just want to put that out there.
Thank you for your support for all these years. I really appreciate it.
Definitely, because a lot of people who went through what you went through, justly or unjustly, would have folded a long time ago. But you're an example for people older and younger than you, and I just want you to know that.
Thank you.
And the last question, you ever see these 501 trading plans that company executives have? I was thinking one day, perhaps you, since you've been in that stratosphere.
Yeah.
Can you hear me?
Yeah, I can hear you now. Yeah.
Oh, okay. Should there not be a rule that perhaps you see executives trading or selling stock and then they claim it's according to a pre-planned trading plan? Should there not be a caveat where perhaps that trading plan should not go in effect? And then you choose the day, the time frame, 30 days, 60 days of information that is revealed that is, critical to the company's
Order
success
cancelled.
or that will change its value. So meaning I have a plan to sell on November 1st, 10 million shares of so-and-so. But meanwhile, on
Order
November,
cancelled.
on October 25th, I had the trading plan, data came out, which is going to affect the value of my holding. So I don't know if that exists, if that's a proposal that you think would be beneficial as far as aligning the executives with the retail shareholder who doesn't have, that insight.
I do think when they do those plans, they do try to do something like that with the so-called blackout periods. But I do think, like most things, the devil's in the details. And those plans are generally not made public. So I do think that, in the spirit of disclosure, that if you do have a plan like that, it should be filed with the SEC and available for everyone. I
agree.
That probably would save the day here. Because otherwise, in general, the plans are usually they are truly blind. But if you know that the data is coming out a year from now and you're selling according to a kind of a plan that you've, said is pre-done, I do think that there's a bit of a kind of a bullshit factor there, because you can basically say, oh, no, I'm not selling. This is my pre-planned thing.
Yes, or it might have changed the timing of your secondary offering.
Right.
You might know that the company needs to raise money and your preset plan is to next sale is November 1st. So you're not going to wait to sell after that. You're going to raise after that. You're going to raise before that. And obviously you're in total control of when you plan the secondary, correct?
Right. Exactly right. So
okay, great.
I do think you're right about that. But, it's one of these things that you just accept with the markets that's kind of bullshit and unfair, and you just accept it. But, it's, it's kind of a rigged game in some ways, and that's why another reason the question about why would Remy and this company do a phase 3 that they know is going to fail. Well, they may think incorrectly that there's a 5% chance it's going to fail, and in which case they can give themselves a million options. And if they're right, they make $100 million. If they're wrong, they still get paid salary. So it's a win-win. Whereas you and me, we don't get anything for free. So, it's a very unfair system there. Now, again, they're in charge of the company. They got to get some kind of compensation. But if you ask a question why would you advance such an obviously bad medicine into a phase 3 trial? Well, think about it this way. If I can convince the market that it's half as good as a success and I can get the stock up, I can exercise my options and sell, and it doesn't even have to succeed.
Exactly.
Right? As long as it goes up at any point in time, I'm rich. And if I lie about it, it'll go up. And this stock did go up. And, exercising and selling, when the stock's a 5 billion market cap, you can exercise and sell 50 million, 100 million, you're set for life. It doesn't matter if the trial fails or not. That's not the way it works for us. So anyway.
Well, listen, with this investment, I hope to God you crush it, and I just hope it leads you to future. I think if you're barred from having a public biotech company, you're not barred from having a software company, correct? Or a technology company, is that correct?
That's right, and I do think that the lawfare of the last 10 to 15 years that's affected everyone is starting to get reversed. So with at least the current SEC, if I wanted to be publicly traded, I think they would let me. With the FTC and things like that, there's a lot of battles to fight, but we all know just how lawfare kind of works. If there's somebody that people don't like for whatever reason, maybe they're saying things that most people, the people in charge, don't want to hear. Maybe they're doing things that people don't want in charge, threatening their status quo. I think that, they'll put the legal world on you, and it's very hard to survive that. But to your point, resilience is important. And I think, I'm thinking of the president, of course, and I'm not Trump's biggest fan, by the way, but I do think the fact that he, they threw 4 legal cases at him. A guy so rich like that, he might as well just say, you know what, this isn't worth it. Why in the world would I want to go through 4 arrests? They arrested him 4 times for 4 different things. Why the hell would I want that? I should just play golf for the rest of my life and enjoy this great life I have. And he decided to fight. And, I'm sort of in the same camp. And ultimately, however it comes out, I do think, there should be room for second chances for people and stuff like that. even if they did make mistakes. But in a world that's like very litigious and very like cutthroat and trying to, really hurt people based on their beliefs, I think, it's important to be open-minded. That's why I don't wish any harm for Cassava stockholders. I don't, hope that they go bankrupt. I don't, hope of any of those things. I think that if they do lose money, that it should be a lesson worth the time and worth the money of the lesson, and they'll learn how to do biotech better next time. And if they make a fortune, God bless them. But if they lose a fortune, I told you to lower your bet. And, if you were so greedy that you wanted to make the maximum amount of money and you left caution into the wind and you said, who cares if it might fail, then, that's a problem that you're going to have to live with. And, at least I warned you. So anyway.
If anything, you're doing them a service because you're shedding light and everyone's able to make their own decision afterwards. So I would want to always hear the opposing view. I don't want a bunch of people telling me why I'm right. I want to know why my thesis is wrong. So if anything,
exactly. Well,
because they either think you're off the wall and they're gonna go in it now full throated,
right,
or they're gonna say, you know what, this guy's, he made me think and he brought up some points that I never thought of before. But as
totally.
far as you go, I know your comeback's going to be greater than the setback, and a lot of people don't know our culture and what we come from, but you don't know where you're going unless you know where you came from, and a lot of people in the world do not have the historical background that our culture and our ethnicity have, and I know you appreciate that.
Thank you, Shiftar. Yeah.
You think about your ancestors. You don't have to go too far back because
Order
most
cancelled.
of our families came from abroad, and they didn't have what me and you have, so I know you realize that and you appreciate that. And like I said, I want to let other speakers speak, but this won't be the last time I chat with you, but you've been a real one since day one, my friend.
Thank you very much. And yeah, I think I appreciate what you said there. And yeah, there was something I wanted to add, but I forget. And my girlfriend's waiting here and the market's closing, so I think I'm going to take off. Thanks everyone for listening, and good luck if you're in Sava. I do wish you luck. I want you to make money. I want you to lose. If you're going to lose as little as you can. And I'm always here for questions. Oh, the thing I wanted to mention is I went to the Cassava Discord to address some of these points, and they banned me. And it's like, look, I'll be able to get my message out one way or another. So anyway, it was sort of sad to see that, sort of happen. But regardless, putting your fingers in your ears and refusing to listen to the other side is a great way to lose money. Anyway, thanks a lot, guys. See you later.